Okay, so if you've been procrastinating on buying a house, now might be the time. So buying a house is your convenience. It's up to you guys. My job is just to make sure you guys know the programs out there. And today we have great news from HUD. They're going to reduce the FHA fees. So what happens is, let me give you a little bit of backdrop on it. People call us every day looking to buy their first house, okay? And it's not only their first house, it's even multi. If you bought your second house or third house, investment properties and all that, we can help you with any of those. But we get inundated with calls, and I say that in a good way, of people looking to buy their first house. So most people in most situations, if your credit score is below like 680, it normally makes sense to go with a conventional loan if you can meet their qualifications versus an FHA loan, because FHA has fees, okay? And that's what our discussion is for today. So FHA charges fees when they do your loan. They charge you a fee up front, and then they charge you a monthly fee, and it depends on how much you put down as your down payment. So if you put down less than 10% on an FHA loan when you're buying the house, you're going to have PMI on there forever. If you put 10% down or more, you're going to have FHA or the FHA PMI on there for 11 years. Okay, so I just want to give you some backdrop on the numbers. So getting back to the equation of who is normally the best borrower for an FHA loan, it's normally been 680, 660 credit scores and less, because by time you make the adjustments to the conventional mortgage rates, because of your lower credit score, your rate's normally much, much higher on conventional loans than it is with FHA. But we did an analysis today after we got this news from FHA that they're going to reduce their monthly costs. So let me go over the analysis that we just did for a borrower. So the first thing I want to show you guys is right here. Here's the analysis. We have a borrower that's looking to buy a $450,000 home. Okay, the backdrop is they are not a first-time home buyer. So if they go with conventional financing, they have to put down 5%. Okay. However, if they go with FHA, they only need 3.5% down. All right, so that is the backdrop of this, and their credit score is 720. They have no debt ratio problems and anything else. So here's the analysis that we did for this person. Based on the conventional loan, they would end up getting a loan for $427,500. That's their 5% down, which is the $22,500. They qualify at a rate based on 95% loan to value with a 720 credit score of 7.125 today. Yes, 7.125. We're at 5.99 about 2-3 weeks ago. So mortgage rates are moving all over the map. All right. So when you factor that in, the monthly principal and interest, we have that on there as P&I, principal and interest, is $2,880. The mortgage insurance, because these clients only put down 5%, would be $285 a month, bringing their principal and interest plus their mortgage insurance to $3,165. Now, we didn't include in here taxes and homeowners insurance and all that stuff because it would be the same if we moved it over to the FHA side. We just wanted to show you the principal and interest payment plus the mortgage insurance. So now let's roll over to FHA. FHA, because this client only needs to put down 3.5%, their loan amount's going to be a little bit higher. Plus, FHA charges a fee up front, an initial fee on your loan, and they finance it. So in this case, this would bring this client's loan amount to $441,849. And they only need $15,750 brought to closing. So a difference of $7,000, basically $7,000 right there, less that you have to bring to closing. As we move through this, you can see the interest rates at 6.25, almost 1 full percent lower than the conventional rates. Okay, then look at the PMI factor. The PMI on the FHA would be 199 compared to the 285. Now look at the bottom line payment. This is where we really need to focus in on. The bottom line payment on the FHA is $2,920. It's $240 cheaper than the conventional loan. So that is why this information is so important to you guys. And I figured I would get this information out to you today before you lose out on knowing this information. So if this news is news to you, or this information is brand new news to you, maybe you didn't know that interest rates are changing come March, and they're adding in things like if your debt ratio is high, you're going to have a higher rate. And it's never been like that before. So there's major changes coming to the mortgage industry, especially with rates. and PMI and everything else. So if you want to find out what you qualify for and how we might be able to help you at the Frio team, all I need you to do is check out down below, schedule a Calendarly meeting, check out our websites or anything else you want to check out to see, what we do. We are mortgage advisors throughout the whole country as well as Puerto Rico. So if you're out there, we would love to help you. And if you find all this information brand new to you, that's another reason to give me a thumbs up, subscribe down below, and hit the bell every time I post a video so you can be informed. Thanks so much for watching. God bless. I'll see you next time. Bye-bye.